A brand new real estate investment trust was launched earlier this year that's unlike any other that currently exists. It's delivered some impressive dividend growth in its first 9 months of existence, growing their payout from 38 cents per share to 73 cents. This gives their stock a dividend yield of over 10%, which is really unusual for a REIT considering this isn't a mortgage REIT. Today we're going to take a look at Millrose Properties, ticker MRP. Millrose Properties is the first ever publicly traded land banking REIT, which puts it in its own unique category. So let's take a close look at how this type of REIT works, how its dividend payout works, and if it's worth considering for its high yield. Before getting started, we need to know what a land bank is and how Millrose conducts their business. Although land banking is not a new strategy, it has been gaining in popularity in the home building process. And every land bank can do this a little differently, so what I'm describing is how Millrose describes their business. Land banking is a financial agreement in which a group of investors, or in this case a company, buys land on behalf of home builders or developers and earns a fee to hold that land until the client is ready to use the land to build a house. So when you think of new housing developments, as in you don't even have a developed lot yet, a land bank is often the first company involved in that process. Millrose Properties has a timeline on their website that does a pretty good job in explaining how they conduct their business. This company doesn't actually develop the house themselves. They merely hold on to the plot of land until the house developer is ready to take it over and start building the house. The first step involves Millrose entering into an agreement with a house developer, such as Lennar, Pulte Homes, or Taylor Morrison. They currently do business with 12 different home developers across the country. But a developer will come to them and say, "We want to build houses on this land, but we don't want to put up all the capital right now to buy all these lots. If you buy this land, we'll agree to buy it off you at a later date at a certain amount, and we'll also pay a deposit and a monthly service fee until we buy it off you." If Millrose, after conducting their own due diligence, likes the proposal, then they'll enter into a contract and buy the lots. The deposit and the monthly fee are not refundable, so it decentivizes home builders from not following through on buying the land at the end. Millrose then funds the home builder's land development into a finished home site. At the end of the agreement, the home builder purchases the land and Millrose uses 100% of the proceeds to fund future acquisitions. The reason why home builders use land banks is to preserve capital, reduce balance sheet risk, and focus more on the home building process. Years ago, this was something that home builders usually went to your typical bank for. But as time has gone on, fewer and fewer banks have been willing to lend money for this service, which is why land banks now exist and are flourishing. This REIT is the result of a spin-off that took place earlier this year from Lennar, who still own a 20% stake in this company. In an earnings call, though, they did explain that Lennar does intend to gradually reduce their ownership stake in this company over time. So like I mentioned in the beginning of this video, MRP is a stock that's had some really good dividend growth this year. And that can partially be attributed to their dividend payout policy. According to their website, they state that 100% of their earnings will be paid back to shareholders in the form of dividends. Now obviously they have to cover their expenses, and they use the proceeds to buy new land developments, but apparently after all of that, then everything is going to be paid out in dividends. REITs are only required to pay out 90% of their earnings to shareholders in order to avoid paying corporate income taxes. So the fact that MRP is going to distribute all of their earnings after covering expenses is interesting. As great as that sounds, I do question what impact that could have on their book value. That is the unfortunate part of this. A land banking REIT is uncharted territory, so we don't know what to expect. But their dividend policy also implies that their dividend will not be consistent. Since they're paying everything out each quarter, they either believe that their earnings will eventually flatten out, or they will pay a variable dividend every quarter. If their last dividend was 73 cents, the next quarter it could be 67 cents, and then 70 cents, then 69, and so on. So that is something that I would keep in mind if you are looking for a steadier payout. But not surprisingly, because they pay out all of their earnings, MRP has a very high insider ownership percentage. According to FinViz, MRP has an insider ownership percentage of 27.52%. That's the highest percentage I've ever seen for a REIT, and it is a good sign of confidence. If you don't have faith in your own company, you wouldn't want to buy shares of it using your own money. Let's look at some stats they provided in their latest earnings report. As of Q3 of 2025, Millrose owns 138,691 current home sites across 876 communities in 30 states. On the right, we can see California, Texas, and Florida represent the largest percentage of their portfolio. Housing is in pretty high demand in some of these markets, especially California, Arizona, and Colorado. This gives their total land assets an estimated worth of $8.7 billion. So everything looks pretty good up to this point. But let's talk about the number one concern surrounding this REIT, which is the demand for new home development. In order for this company to continue to do business and flourish, there has to be a continued interest in building new houses. Although I mentioned that some of Millrose's largest markets have housing shortages, what matters is if people are actually buying houses. According to the latest data, existing home sales have steadily been going up nationwide for over a year. But we need to keep in mind that there is a difference between the demand for existing housing and the demand for new housing. And depending on the economy, these two metrics can be vastly different. Even during slow markets, the demand for new luxury housing can still be high. What's interesting is that in the month of September, sales of new single-family homes in the US jumped by 20.5%, the highest level since January of 2022. Meanwhile, the number of unsold homes on the market fell 1.4% to 490,000. This would likely catch a lot of people by surprise. Everywhere you read, people are worried about inflation and tariffs and rising insurance and property taxes. But new home development is currently the highest it's been in 3 years. Needless to say though, Millrose is a REIT that's going to be cyclical, much like hotel and office REITs. The demand for new housing is really the only metric that you would need to do your research on to monitor if this company can grow or not. Looking at this REIT's first reported quarter, they had 111,000 home sites versus 138,000 today. So that is some pretty quick growth in their first 9 months, since new housing is still in demand. What I think is also going to be really helpful in this particular situation is monitoring insider buys and sells. If the management team is selling shares, that might be a good indication that they think the housing market is going to slump. According to SECform4.com, there's been a lot of insiders buying their stock in November. So to me, that does look like a good sign that they do expect this REIT will continue to do well. Ultimately, I think MRP could be a good short-term play, but I'm not convinced it's something that you would want to hold on to for several decades straight. Because this company has only ever existed independently, at least, when the housing market is soaring, we don't know what kind of strategies they can use when the housing market starts to slow down. But it could be a very profitable investment when new homes are still in high demand. Let me know what you guys think and if you'd consider investing in this REIT. But with that being said, that's going to wrap up today's video. If you'd like to connect with me and see what's inside of my own high-yielding dividend portfolio, then feel free to check me out over on Patreon. You'll be notified when I make trades and you'll get access to our Discord with other high-yielding investors. Thanks again for watching. Please be sure to like this video and subscribe if you want more high-yielding investment content. Thanks again for watching, and I hope you all have a great day.